Caveman smart, but caveman not know smart words. Caveman want to learn smart words to impress caveman friends at Caveman Rock Party. So here are some smart financial words for your caveman brain. Asset. Valuable things caveman owns. Things like rock phone, rock jewelry, rock sneakers are considered small assets. Big rock stocks, rock cave, rock business are considered large assets. Liability. Debts caveman owes. This can be caveman mammoth loan, caveman boulder loan, or caveman rock slab credit debt. I thought it was free rocks. No. Net worth. What's your net worth? I don't know. Probably 2 or 3 pebbles. No, that's not what I mean. Maybe 4 or 5 to the right buyer. This is caveman's total wealth. Basically, caveman's assets minus his liabilities. So if caveman has 500,000 rocks worth of assets, but 300,000 rocks of credit slab debt, caveman has a net worth of 200,000 rocks and too many boulders. Income. Rocks caveman makes either from caveman's job, caveman's business, or caveman's investments. Whoa, just got paid. Time to make only financially responsible decisions. Dude, did you hear they found a new mammoth painting in the caves? Expenses rocks caveman spends. This can be cave rent, fire bills, mammoth gas, subscriptions, and most importantly, food. Capital rocks caveman uses to start, run, or grow a business. Wait, I thought this was a capital. No, that's a capital city. So there's a lot of rocks there? Well, I mean, yes, but that's not why it's called a capital city. Rocks like gold? No, I mean, well, maybe the lost cave of gold. No. Quick, everyone, to the lost cave of gold! Wait. Stock caveman see rock stock go up. Caveman see other cavemen get rich. So caveman invest without doing any research. When caveman buys stock in rock company, caveman owns a small piece of that company. Hey everyone, I just bought stock in this company. I'm your new boss. I'm really excited to tell you all what to do. Where's my cave office? That's okay, I'll find it. He knows that's not how that works, right? Actually, he bought most of the stock, so technically, he is our new boss. Equity. This is how much of a business caveman owns. If rock company is worth 1 million rocks and one caveman owns 51%, he has 510,000 rocks of equity, which actually does make caveman a majority owner. Liquidity. This is how easily caveman can sell assets. If caveman can sell something instantly, this has high liquidity. But something that takes caveman long time to sell has low liquidity. It's easy to move water from one rock bowl to another, but a boulder, not so much. Definitely not so much. Hedge. A hedge is a boundary formed by closely planted shrubs or... Wait, that's not right. Hang on a sec. When caveman makes a second investment, just in case first investment go bad, this is a hedge. If caveman owns a lot of rock stocks but is worried about big volcano, caveman can invest in sticks as well. The sticks are a hedge against rock shortages. And if volcano destroys sticks too, well, there's always the other hedge. Arbitrage. Oh, I know this one. This is stealing someone's fire secrets. That's espionage. Using mammoth hide to blend into your environment. That's camouflage. A group of dudes surrounding the tribe leader. No, that's an entourage. Buying something where it's cheap and selling it where it's more expensive. No, that's... Oh wait, that's actually right. Arbitrage is when caveman buy rocks in Rock Valley where rocks only cost 1 pebble and sells them in Cave Town where rocks cost 5 pebbles. Because in Cave Town, rock rare, rock valuable. Derivatives. Grog makes a contract with Thack. The contract says that in 1 moon, Grog will buy 100 rocks from Thack for 5 pebbles each. If rock price goes up to 10 pebbles, Grog wins. He buys rocks for 5 pebbles that are now worth 10. But if rock price goes down to 2 pebbles, Fack wins. Grog must still pay 5 pebbles for rocks that are only worth 2. A derivative is a caveman contract whose value depends on the price of something else, like rocks. Market cap. A mammoth hide cap you buy at the cave market. No, this is the value of Rock Company. The price of Rock Company shares times how many shares Rock Company has. See, you've lost me. If Rock Company has 100 rock shares and each share is worth 5 pebbles, then Rock Company's market cap is 500 pebbles. Yeah, I knew that. I was just joking. Oh yeah, okay, sure. Speculation. Caveman think rock price will go up. But why does Caveman think this? Maybe he has inside information. Maybe he's done hours of independent research and calculations. Or maybe he just feels. So Caveman takes the risk and buys 50 rocks. Caveman isn't buying rocks to build with, but to sell later for more pebbles. Bull market. Cave stock market is generally going up. Rocks, sticks, even flint is making a comeback. Cavemen are optimistic and don't want to miss out, so they invest more. Yeah, this is awesome. We're going up and we're never going down. Ah! Bear market. Cave stock market is generally going down. Rocks and sticks are going down. Flint is dead. Volatility. How much and how quickly cave stock market go up and down. If rock price go from 5 pebbles to 2 pebbles to 10 pebbles in a few days, this high volatility. If rock price go from 5 pebbles to 6 pebbles in a few days, low volatility. If caveman buy crypto, good luck. Diversification. Caveman doesn't put all his pebbles into rocks, no matter how tempting it is. He puts some pebbles into rocks, sticks, flint, and Nvidia. That way, if one loses value, maybe a certain bubble pops, Caveman doesn't lose everything. Leverage. Caveman borrows pebbles from Cave Bank to invest. Caveman can now invest more pebbles than he actually has. If rock price go up even a little, Caveman can make many pebbles. But if rock price go down just a little, Caveman can lose everything and be in debt to Cave Bank. Dividends. If Caveman owns shares in rock business and rock business is booming, Caveman may receive some pebbles every few moons called dividends. The more shares Caveman has in rock business, the more dividends Caveman will receive. Yield. This is Caveman's percentage of dividends. If Caveman invests 100 pebbles and every year he gets 10 pebbles from dividends, Caveman's yield is 10%. Capital gains. Caveman buy rock for 1 pebble. Later, Caveman sell rock for 2 pebbles. The extra pebble Caveman made is capital gain. Capital gains are profit Caveman made when he sell asset for more than he paid for it. Nice gains. Thanks. I did chest and arms today. Not you, him. Oh, thanks. I used an investment strategy based on systematic market trends with a particular focus on no one cares about my muscles. Capital loss. Basically, the opposite. Caveman sell asset for less than he paid for it. Bro, I'm serious. These are going to be the next big thing. Wait, you paid all your pebbles for a cave wall drawing? No, you don't understand. I'm going to be the richest caveman in the world. So, are you the richest caveman in the world? Shut up. Collateral. Caveman tries to borrow 100 pebbles from Cave Bank, but Cave Bank isn't convinced Caveman can pay them back. So Caveman promises to give them his pet mammoth if he can't pay his debt. Pet mammoth is collateral. Deferred. This is when Caveman can't pay back pebbles he borrowed. Defaults can lead to penalties, more debt, or even bankruptcy. I declare bankruptcy! Ah! Cave government will force Caveman to sell his assets to pay back cavemen he owes, or make Caveman pay back small amounts over time. Short Caveman thinks rock price will go down. So, Caveman borrows 10 rocks from Caveman friend. Caveman sells the 10 rocks now for 10 pebbles each. Caveman has 100 pebbles.
I got this!
Later, rock price dropped to 5 pebbles each. Caveman buys 10 rocks back for only 50 pebbles. Caveman now has 50 pebbles and all 10 rocks he borrowed. Caveman then returns the 10 rocks to Caveman friend and keeps the 50 pebbles difference as profit. A short is basically Caveman betting the price of something will go down. Margin. This is similar to leverage, but instead of borrowing from Cave Bank to invest, Caveman borrows from Cave Stockbroker. If rock stock price dropped too much, Caveman stockbroker may ask Caveman for more pebbles to cover debts. This is called a margin call. Have you seen the stock price? Rocks are plummeting. I'm going to need more capital ASAP. Otherwise, this whole deal is off. You understand? Trade surplus. Rockland sells more rocks to Cavetown than they buy. Trade deficit. Cavetown buys more rocks from Rockland than they sell. Monopoly. Caveman's favorite board game. No. It's much more depressing. A monopoly is when one caveman company controls the entire market. It's like one rock company controlling all the rocks. They can charge whatever they want because cavemen have no alternatives. Hey, you want to try a stick? I'm good. Oligopoly. Slightly better than a monopoly. This is when a few different rock companies control the rock market. They all watch and compete with each other. Subsidy. Caveman government want to make rocks cheaper, so they give caveman rock finders extra pebbles for every rock they find. Caveman rock finders can now sell rocks for cheaper or make more profit. Help from caveman government is a subsidy. Appreciation. Over time, rock become more valuable. Depreciation. Over time, rock become less valuable. Globalization. Globalization is the increasing technology-driven integration of global economies, cultures, populations. Hey, caveman brain. Oh, right. Rockland sells rocks to every caveman tribe. Cavemen from all over the world are connected through rocks. That's globalization. Valuation. Caveman have rock pile. Caveman want to sell rock pile. But caveman don't know how much rock pile is worth. How much? I don't know. So caveman gets a valuation. Rock pile has 100 rocks a year. Rocks sell for 5 pebbles.
No.
So rock pile is worth 500 pebbles. How's 3 pebbles and a firm handshake? Deal. Correlation. How two things move in relation to each other. If rock price rise, then stick price rise. This is positive correlation. If rock price rise, then stick price fall. This is negative correlation. If rock price change and stick price don't, this is no correlation. Subscribe. The act of hitting the subscribe button. Oh, no. They know how that works. Are you sure? But how will they know to like and subscribe if I don't tell them? Now go and impress caveman friends with your new fancy big brain words. Welcome to Caveman Finance. So, what do you think of the geopolitical state of the world? Arbitrage. Oh, yes indeed. Interesting. Yes indeed.